and my trading warrior brother, Marc Chandler. How are you, Mark? Great to have you back. Asking you to unmute.
Good, sir. Good morning, everybody.
Hey, Mark, how are you?
Good morning, Mark.
Surviving.
You're surviving?
I think that's the best we can hope for these days, huh?
Oh, okay.
Hey, but listen, before the other guys go, let me just point out, a couple of levels, key levels here. 111.50 in the euro. There's about almost a $700 million option that expires today. And in the yen, we're approaching that 115.50, and there's about a $775 million option that's struck there that's going to be expiring today. Sometimes those option expiries play a role, and just nice points to keep in mind.
Okay, Mark, I know that you appreciate that, and I know that you wanted to talk about this chart, the employment index chart. Everyone see it?
Yep. So that's the employment cost index, and the reason that's important is that it's coming out tomorrow, and that Powell made reference to it both in December and he alluded to it yesterday. And the argument is something like this. The Fed, like a lot of policymakers, not just in the US, but in Europe as well, they think that ultimately inflation comes down to labor costs. And I personally don't think that's true, but that's a bigger argument for another time. But the point is that the policymakers have been putting more emphasis on this. And this chart shows you just what a huge jump there's been in US labor costs. And this labor cost index includes commissions, unlike other wage measures. And we're expecting another large rise to be reported tomorrow for Q4. So this was the largest increase at least in 20 years since this time series began. It was up about 1.3% in Q3, and it looks like up another 1.2%. This would bring labor costs, this labor cost index, above 5% year over year. And this is why I think the Federal Reserve yesterday, the statement was like what everybody expected, I think, but Powell's comments indicated—
Well, hoping, Mark, what everyone was hoping for.
Yeah, perhaps hoping for. But I think that the pattern is, though, the market to rally on the statement, and then Powell comes along and tends to put an end to that.
And I think that's different, isn't it?
Yeah, but I think what Powell did yesterday was important, because what he said was that, look, there's a lot of uncertainty in the world. We're not sure about inflation. We are sure about the strength of the economy, rising prices, and the robust labor market. He said, so the Federal Reserve needs to maximize its flexibility. Nothing was taken off the table. And here's what the market's pricing in now. It looks to me like the market's saying there's a 1 in 3 chance that the March hike is going to be 50 basis points. And the market's saying there's about a 75% chance we get 5 hikes instead of 4 this year.
Okay. All right. So, it's being reflected in currency prices here. So this is a new low for the move in the euro. Are we approaching any levels that you see value in euro down here, Mark? Because there are some technical areas of interest, say around 111, between 11 here and 110.50.
Yeah, so I know that there's going to be this temptation, because we've had a false breakout in dollar yen to start the year. We got up to whatever 116.35, 45, and proved unsustainable. We had that breakout to the upside in the euro. And so, of course, I know that the tendency is to say, look, 3 in a row, this is going to be a false break too. But I do think that there's something that's changed here, like a structural break, almost like a gap. And I think that my sense would be it's better, I think, right now to think about a level to stop out of short euros rather than trying to pick a bottom outright. So I'd be looking at now. I like that. I think someone had mentioned earlier 111.80, and my commentary this morning, I thought it would be 112.20, but something like that. If those kind of levels don't break to the upside, I'd rather be short. I'm looking for a move to 110, maybe even below 110. Okay. And so I'm hesitant to think that. For me, the bull story of the dollar, Fed's gotten more aggressive, and remember, we still have these Russian troops. Imagine what a war could be like in Europe. And I'm not saying if today or tomorrow, but there's some meetings in 2 weeks. So I'd probably put that as still as a medium term, sort of second half of February type of issue. But I think that the backdrop seems very clear. The Fed, the Bank of Canada, the Bank of England, who meets next week, all in a hiking modes. And the ECB is going to drag their feet. They've got a meeting next week, and we're going to get CPI, a flash reading of January CPI. And typically, all but last year, say for the 10 years before 2021, inflation fell in January in Europe. And this is partly the practices of businesses. So it's hard to tell what they're going to do this year. We're not in a normal situation. But the surprise could be a soft CPI from Europe next week, and then the ECB in contrast to the Federal Reserve. But let me say something else quickly, though, here too for you, Dale. That is that China is easing.
Yeah,
China's cutting rates, and yet the RMB until today was the strongest currency in the world, and it appreciated to a 2 or 3 year highs. So just because you know the direction of interest rates, sometimes it doesn't tell you where currencies are going.
I think we're having a reversal week to the upside. That's a pretty nice looking weekly candle we're getting in the yuan.
In China. Yeah, the trick with China, though, is that the mainland is closed next week. The markets are closed for the week-long celebration of the Lunar New Year, and then next Friday, of course, opening ceremonies.
Yeah. I think that you have to be wrapped up in saran wrap and tinfoil and some bio gear to get into the country. And every 5 minutes, you have to take a COVID test. I hear it's very difficult for the athletes in this environment. They're all in isolation. Do you know why they're saying that people could leave, U.S. citizens or diplomats could leave China? They're advising them to leave China?
We haven't seen anything like that.
Yeah, I think they're saying, I think it's because of the restrictive nature of COVID in China. But
it's true. It's true that COVID, that China's got this almost a zero tolerance policy towards it. And so this is part of the reason why I think the Fed is also concerned about the unknowns about inflation, supply chain disruptions. I think it was the Bank of Canada that talked about yesterday that supply chain disruptions have lasted longer, persisted longer, and have had a greater impact than they would have thought.
So, Mark, we've had a pretty big break in risk, not the same magnitude of what happened in COVID, but I don't think it's over. And we haven't had such a risk-off environment for a while. And if you went to sleep for a month, you miss this one. But perhaps this one might be a little longer lasting. And how does that play into your analysis of currencies now that we've had 10-15% corrections? All last year you'd have 5 and then new highs, 5% correction, new highs. It feels different this time. Is this going to be cause some less demand for the dollar because everyone was parking in the FANGs? And I even heard people call the FANGs before 3 weeks ago. They called them their safety trade. If they weren't in crypto, I'm telling you, Mark, I've heard this, that people would liquidate crypto and go into the FANGs. That's where they would park their money on their safety flight to quality trade.
Yeah, so here's one way to think about it, right? We can think about value and growth. And so before the U.S. market, cash market opens today, here's what it's been so far this year. The Russell 1000 value is down about 4.6%. The Russell growth is down 13.5%. So it's not that the value has gone up that you've saved, but you have saved the opportunity cost. So I think that you're right that this is a new world of things. But at the end of the day, I think two things. One is I think someone had mentioned it earlier too, how important that risk management and money management is when it comes to trading. I think people who do make money in the long run don't make money because they're necessarily right more often. It seems to me they make money because they're more disciplined risk managers. So I am concerned, though, the big picture. I'm concerned that while the stock market has more room to go down, that where are we really going to go at the end of the day? And that is
there is no alternative. So if it is cash, Is it going to be the dollar or other fiats, or maybe there'll finally be a flow into, dare I say it, gold after, this washout completes? And I remember in the last interview, you were worried about that the Fed's policy of tightening into what would be a softening economy could turn out to be a policy error. Do you still
Yeah,
feel that way?
I still do, and I think that here's what I'm looking at. So, leaving aside monetary policy for a second, fiscal policy. Without that Build Back Better program, you see what
Yeah,
happened earlier this week? The
right.
IMF revised down U.S. growth from 5.2% to 4%.
Yeah,
We've got fiscal tightening that so after the great financial crisis, it took about 3 years to reduce the deficit by 500 basis points. That's what's going to happen this year. So we've got a big dose of fiscal tightening that Powell made allusions to, but I'm not sure I'm still not sure that is widely recognized. Secondly, is people, whether you're looking at charts, you're looking at macros, you're really looking at patterns. And one pattern that strikes me is that in the last three business downturns, the last three recessions we've had in the U.S., oil prices have doubled.
right. Yeah, I
Oil prices
remember
have
you
doubled
saying
again.
that last time, and here, I mean, it depends what level you take the low at, Mark. Right? You're going to
Yeah,
call
I
it
would. So I say, yeah, it doesn't make any sense to take the low when it was negative, but
how about
give me when
20?
yeah, or give me the vaccine when we were closer to 40 when the vaccine was announced.
Okay,
So and then the other thing that's happening is that people have made a big deal about this boost in savings from the transfer payments and people not
they
spending.
still say their balance sheets are great. Consumers have so much money they don't know what to do with it.
Yeah,
Do
but
you
here's my
believe that?
point: is that I see people talking about it, but I think that what's missed is that you're looking at it too high of a level. The people who have savings are perhaps people like myself who get paid more than the median family income. But middle and lower income families, they're drawing on their savings. Pent up demand is being met. And the last thing, and we saw this with yesterday's inventory data, which is one of the things that have helped the U.S. GDP number. You saw that 6.9% annualized rate is the inventory cycle, right? During the in 2020, they really drew down their inventories and they've rebuilt them very quickly. And so that becomes no longer the tailwind for the economy. So these factors, monetary tightening, fiscal tightening, doubling of the price of oil, the use of our drawing down our savings, the inventory cycle, all things point to me that by the second half of this year, we're going to be wishing we could, that 3% growth was still possible. I think that we're headed for a very big slowdown. And Powell admitted that there's going to be a market slowdown in Q1. The difference is, and of course, the Federal Reserve has much better economists than I'll ever be. But my bet would be that the economy doesn't bounce back like they think it will after the Q1 slump.
Okay, so yeah, that's gosh, you think that before he gets all those rates in, because I mean, you're talking 5 months. I guess he could probably get maybe 4 in before he recognizes maybe another more damage in the stock market, the wealth effect, less fiscal stimulus into consumers' pockets, no more child care checks, that Powell can reverse again. I mean, is this the most reversals for any Fed chairman's tenure? Does
I don't know.
has
I mean,
Powell done the most flips more than Greenspan?
yeah, maybe the Greenspan was in there for so much longer, but I kind of want to say that like. Uh, what's the difference? Like, what's worse? Like, we never get it right. So, what's worse? Being fixed in your views, stubborn, bullheaded, or is it flexible in responding to changing circumstances? And I think as traders and as investors, we have to have that like mental flexibility to have a hypothesis and then be willing to be proven wrong, not to
Right.
attach our egos to these things. And so, I kind of can have respect for someone who says, "Hey, listen, I was wrong. The facts have changed. I got to change my views."
Okay. All right. It depends how long, and he was stubborn with transitory. Don't you think he was stubborn for a while? When
Well,
there were,
I,
I mean, there were a lot of people saying he's, uh, that he's wrong about inflation. It's going to be much more dramatic, and it's not transient with these, you know, uh,
I
food
think where the
prices,
Fed was
Mark.
most stubborn wasn't so much on the transitory, because I don't really think that the amplitude is really a factor when we try to consider how permanent it is. I too think that inflation is going to be falling. But where I think the Fed was wrong is I think that they were quick to expand the balance sheet and were slow to taper. For example, why should
Yeah,
we saw the numbers earlier this week. US average house prices,
yeah,
20 largest cities, up over 18% this year. I want to say, like,
uh,
why in the heck are they buying mortgage-backed securities? And if inflation expectations are a key, I think we talked about this last time. I kind of think the Fed has been keeping its, like a butcher, keeping its thumb on the scale. They've been buying inflation-linked bonds and then telling us what the market's telling them about inflation. So I think the Fed should have pulled back from the bond buying much earlier, especially
yeah.
what it was buying.
Okay, so you think the leverage in the system is going to be able to take it? I mean, you look at what happened even before the stock market sold off in the corporate bond market, for example, and the junk bond market, Mark. They were under pressure well before we had this sell-off in equities.
Yeah,
Don't you
aren't they
think
sort of
there's
like,
bubbles there?
I don't know, like bubbles? I think that, like, to me, and this is why maybe tying it back to the FX market, one of the first things I look at these days is the broad risk environment. And that includes, ironically, crypto these days, which I think is a risk asset.
Yeah,
Uh, and so I think about the risk. And so for me, say the currencies like Aussie, Kiwi, Canada, the Scandies, uh, these currencies often are moving in a group, and the divergence within the group is interesting. But this is a risk on currencies.
right.
And you've seen this with the Canadian dollar. I mean, Bank of Canada was just as aggressive as the Fed was yesterday, and the Canadian dollar still suffered when the stock market headed south after Powell began talking.
Yeah. You like Looney here?
I like it for I like the fundamentals, but I'd have to still be hesitant about trying to pick a top to the U.S. dollar. But Canada would be one of the first I'd go for.
Yeah, because it is interesting with Dixie making new highs that were well off the highs here
So yeah,
at
so maybe
131.
yeah. So what I find is in a strong U.S. dollar environment, the Canadian dollar typically does well on the crosses, almost like the Canadian dollar gets dragged along with the U.S. dollar a little bit more than other currencies. It gets hit a little bit less, as you may see it.
Yeah.
And so maybe the way to do this, if you're trying to pick a top to the U.S. dollar, is to get Canada on one of the crosses.
Okay. So that's a great idea to everyone that's listening is look at the CAD crosses because I think this is interesting, Mark. It I kind of look at the fact, and it may end up not happening, but every other time the euro's made new lows here, Mark, euro pound has been making new lows with it. I think this is the first time in several months that the euro has made new highs with conviction, and EG is not making new lows. Could we be in a position here where the euro's been underperforming cable for a long time? Those flows might reverse.
Yeah, I think we need to get past next week's Bank of England meeting. Bank of England meeting next week is important. First,
Okay.
I want to say the market's like 80% sure they're going to raise rates, but more than just raising rates. So the Bank of Canada is regarded, looking at what the swaps market's price in, is the most aggressive of the G7 central banks on rates. But what Bank of England said is that when their base rate gets to 50 basis points, which is what's going to happen next week's 25 basis point rate hike, they will begin allowing the balance sheet to shrink. That is to say, the Bank of England, will be the first to allow its balance sheet to shrink. And they have a huge debt maturity next month, I should say March. And so I think that despite the politics in the UK right now, and I suspect that the police investigation of this Partygate will buy Johnson more time, at least into the May local elections. But we'll have to see what happens with the Gray report due, any minute. But it seems that the market's shrugging off the political problems, and in fact, I suspect if there was a headline that says Prime Minister Johnson's resigned, sterling might even rally more against the euro there for you.
Okay. Yeah, and it still looks maybe more vulnerable. Maybe it has more room to fall than the euro too, on the downside if the dollar stays strong. Euro's already taken out the lows, and perhaps cable plays catch up with what the euro has already done. Do you think we could take out 129 in cable
That's the
here,
key
Mark?
level. That's the key level, huh? 129, 130 in cable.
Yeah. Okay. All right. And you talk about oil and you talk about Luna. Here's oil. So it's been so resilient. Oil's been resilient, Mark, and agricultural commodities have been resilient.
Yeah, they're
And
not so different. When you think about how much oil it takes to produce, like I know a lot of my green friends talk about how much water it takes to get a bushel of corn or a bale of cotton. But it's
yeah,
amazing is how much oil you need between the fertilizer and the pesticides.
yeah. And
So,
China not wanting to sell fertilizer, and that's one thing that I've always been confounded about. If a lot of this inflation is food based, just because rates, there are 6 Fed rate hikes, people, I'm not going on a diet, are you? Unless I can't find what I
exactly.
want in the store, that a forced diet. But how does tighter monetary policy rein in higher agricultural prices? It's about weather. It's not about interest rates,
Yeah,
right?
that's really the problem that Powell tried to address. That kind of sidestepped a lot of the issues I thought yesterday. But so there's supply side factors and some demand side factors
Yeah.
fueling inflation. And so because the Fed can't really address the supply side, they basically double up their efforts on the demand side. And it's sort of like that psychologist Abraham Maslow. He says if
Oh yeah.
all you have is a hammer, every problem looks like a nail. And so the
Right.
Fed can address demand side issues, and they can do that by squeezing demand, and that's what they're going to do because they can't do anything on the supply side. They double up their efforts on demand.
Okay. Well, higher prices may lower demand, but I just don't see how higher interest rates um, reduce demand for the essentials,
Right,
food.
and that's what happens, right?
Grains are not really an economically sensitive group of commodities. So
Right.
anyway,
So
I showed you. Remember,
yeah,
Mark, the chant used to be at the Board of Trade, beans in the teens.
beans in the teens.
Yeah, and now they're always in the teens, or
Yeah,
quite a bit. Spend a lot more time in the teens. Maybe they're actually going to be old enough to vote, and the 20s are the next
yeah,
target
yeah.
for these.
What's funny
So
with the grains is that they also now become part of our energy story, huh?
that's true. Yeah, ethanol. Yeah, ethanol, and this natural gas. Also, we're so fortunate here in the U.S. to be getting our natural gas at these prices. And I heard even within the U.S., there's disparate prices depending upon infrastructure because,
Yeah,
the
but you
Europeans.
you
Go
touch on a
ahead.
good point though too with the natural gas and the other elements of the energy complex because the rise in gasoline prices. You've seen what's happened politically in the U.S. Biden's support has
Yeah,
fallen. He's being blamed for higher inflation. And how do
right.
most of us experience that higher inflation? Your food story. I think
Yeah,
that's how I experience higher inflation. And of course, gasoline prices. And
yeah,
gasoline is up almost 10% this year.
yeah. Okay. So, what are your thoughts about what's happening on the Ukrainian border? And I've heard some people say that it's a geopolitical inflection point that's going to, have an impact on the world for years to come. What do you think, Mark?
Yeah, I don't know. I have we all have neighbors. And I know if my neighbor is worried about something about me, we're not going to really have peace.
Yeah,
And I think that two things really. One is I think we confuse the kind of regime Russia has, this totalitarian regime, with its geopolitical interests. And I think that even if there was a democratically elected reformer, they would not accept NATO forces in Ukraine or in Georgia. And so I think that in this particular case, in this particular moment in time, I'd be more inclined to what happened with Finland. Finland, we call it the Finlandization. What that means is that Finland, up until recently at least, has been sort of charting a neutral foreign policy in exchange for having peace with Russia. I don't see why we don't. I mean, it doesn't sound very fair, but I think the similar type of thing should happen with Ukraine and Georgia. It's not fair, but this is like the tragedy of small countries next to big countries. All we have to do is ask Latin America, ask Cuba, ask Grenada what it's like to be next to a big country. It's not fair, but this is a realist view of the world. And so I would be more inclined to avoid a war, get Russia to feel somewhat safer so they can stop being such an aggressor, and neutralize the foreign policy of Ukraine and Georgia so at least it does not join NATO. And there's a lot of steps shy of joining NATO that could help defend Ukraine.
Great point. I don't know if our politicians and the big money interests are going to be as rational and thinking with their heart rather than their wallet. But yeah, I'm just thinking the landscape's going to change dramatically if there's an invasion.
Yeah, so, I think too. How the U.S. strategy sort of requires a lot of people thinking about like the Cuban Missile Crisis, and one of the sort of the underreported elements of how to get those Russian missiles out of Cuba was for the U.S. to quietly remove its missiles from Turkey. And so what we're going to do is we're going to be forcing China and Russia to grab, to the extent they can, their own chips to negotiate. Imagine what would happen when Russia puts missiles in Venezuela or Cuba. Yeah. And why should not Cuba decide which weapon systems, which allies they have, just as much as Ukraine should? And I don't know if this is the kind of world I want to live in and have my children grow up in.
Yeah. So we don't know if we have faith till we need it, Mark. And God, we covered so much ground in this time frame. What a great day to have you. And we have a lot of challenges, but within the challenges are opportunities, right?
I hope so.
All right. Well, you know what I say about hope, Mark? Hope is the oxygen in our lives and the carbon dioxide in our trading.
Exactly.
Well, but you need hope. I mean, you need hope. If you're hopeless, why trade?
Exactly. Very good.
Anyway, Mark, great talking to you, buddy. And everyone knows where to follow Mark at Mark Making Sense, and go to his website for his readings at marktomarket.com, and keep in touch with Mark's thoughts and insights and wisdom through a challenging period that we're about to enter. So thanks again, buddy. Appreciate you being with us.
Good luck to everybody.
Yeah, good luck, and good luck to you. You'll be talking to Blake, I guess. We're sandwiching you today.
Very good.
All right. Thank you, Mark, for being here. And all right, take it easy. So that's going to be a wrap, everyone, for the day. Hope you enjoyed Mark. I love talking to Mark, and I can ask him anything and he has an answer for it. And you're welcome, Mark. People enjoyed and they're thanking you, and thank you guys, everyone who's here on Face every day. It's my mission, our mission, to build up and edify traders every day. Hope that we're accomplishing our mission, but most of all, and especially in these times, don't just count your pips, count your blessings, and we'll see you to wrap up the week tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.